Hi, this is Randy Finney with the Right Side of the Chart, and this is an opening market update for Monday, December 17th, 2018. This one might be a little premature, but I wanted to get it out there early just so it's as actionable as possible in case we get some signs of reversal here. What I'm looking at is this morning in the trading room, I wanted to see how the market opened today. We had a pretty sharp swoon down at the open. I'll get to the updated charts in a second, but these are I shared my thoughts in there in the trading room, basically saying that I expected this swoon down to be a possible flush out move, and in doing so, I was looking for a divergent low, come down here, undercut the recent lows by a little bit, and then reverse. That would give us nice bullish divergence on the 60-minute chart. The last time we had that was back here on this move down. You can see a little washout move there, and if we do reverse, so far so good, but the day is still very early. We haven't even gone green yet, but again, and at this point, I think price targets are premature because if I am correct, and that's a big if, I mentioned taking positions, and then I added to those positions once we started to get some signs of reversal. Stop set just below today's lows. It's like anything else. When you try to catch a falling knife, the way I look at it is it has an above average chance of being stopped out, but the risk reward to allow a 1% downside on the loss for what could be, four, 3, 4, 5, 8%, maybe even 10% or more to the upside, depending on what kind of, depending on what happens this week. Let's see how the charts play out. And again, by the time you watch the video, we may have already jogged down and undercut the lows and have another dump, and then these divergences are negated. By negated, I mean taken out if the PPO here moves down below that previous reaction low, as well as the RSI with prices continuing down lower, we don't have divergent lows. So there's a QQQ 60-minute chart. Again, these were the ones posted right after the open, showing a little swoon down, undercut the recent lows, and we still have, remember, QQQ has still not taken out the lows back from mid-November right there. So either way, looking for somewhere which and I think if it happened, it probably already happened with the initial thrust down. And again, don't be married to any one trade. It's aggressive to step in here long, but that's what I'm doing. And I'm talking in the active trading account, and I'll continue as I mentioned on Friday. 401k longer term funds. I started scaling long Friday. The fact we closed down Big Friday benefits that because when you transfer in a 401k or if you have mutual funds, they only give you the end of day pricing, even if you put that or your buy or sell order in at 9:30 in the morning or 8 o'clock for that matter before the market opens. All orders get queued in, and they give you the closing 4 p.m. price. So, it worked out good that we closed down on Friday. In hindsight, it will, if of course, if we start to rally soon. But again, that's a scale in thing. That's just moving a little bit in, and I'll continue to scale in because I do think at this point the risk reward is starting to shift, at least for a bounce trade. Again, please don't ever confuse short term, near term outlook. Looking for the next let's just say 4 to 8 weeks. That being a potential. We can't even call it a bear market rally yet because just as of Friday, the market's only just entered correction territory, meaning a drop where they closed down over 10% off the highs. So far, this is just a correction in an ongoing bull market. Talk plenty about my longer term outlook for the market, so I'm not going to get into that here. Let me just get these charts out to you. Let's pick up where we're at now. So again, that was what I posted this morning. Now here's what's happened so far. We did go down right about to where I had the arrows drawn. In fact, this is the same divergence arrow or line, I believe, on the SPY, and work to be done. What I mean by that? Well, there's the open, the little dotted yellow lines right there, and you can see the SPY is still comfortably down, a pretty big down, even after the little snapback rally we've had off the low so far. We're still down, 0.65% in SPY as I'm doing this video right now. This is a live chart, but you can see if we continue to move up, I think if we go green today, that'll be the big sign. I think that will spark an additional rally, upside rally. I think this move down today I think a lot of people, like myself, a lot of people covered over the weekend, whether you're long or short. I mean, personally, I think it would have been a big gamble to go home, aggressively long or short over this weekend. And so I think a lot of people waited to see what happened when they started to see the market going down sharply. That impulsive selling, I imagine it sucked in some more shorts that said, okay, now the lows are broken. That's it, nail in the coffin, that kind of thing. So I'm quite optimistic with this trade. Hey, get stopped out. I'm not going to be married to it, but I think it has the potential, all the makings for a bear trap, especially if we had a lot of shorts sucked in on the move today, maybe some more longs capitulated. So there it is. And again, premature right now because, look, I'm going to hold on. I'm either going to be stopped out under today's lows. If we get something, if I'm stopped out, if they just reverse it and undercut today's lows, but then we turn around and put in a big bullish candle, that's what I mentioned in the trading room post this morning. Look for a big bullish reversal candle today, any type of bullish reversal candlestick pattern. You had one right here. You see that little candle there engulfed by a big green candle. So something along those lines. But again, I think the trick would be if we can go positive, especially soon here, in the morning session before lunchtime today, that would be quite positive. So that's SPY, QQQ, similar story. So far, Qs, and again, yeah, I've made it clear this is where my money's going. And QQQ, and I also, well, I did NQ, and I also mentioned taking a position of RTY. That's the small caps. But tech to me is washed out. Apple's been green all day. As I do the video now, Apple's up 1.3%, green all day, while the Nasdaq was down over 1%. That's a pretty good sign, but one stock doesn't make a whole index. Most everything else was down. But again, it's what happens from here. So far, pretty nice green candle following that red candle. Qs are still negative now, and again, that's why I wanted to get this out. Gives plenty of time if we do get a reversal. There's a little, not the trend line I wanted here. There's a little trend line to watch, a little downtrend as well that could trigger some selling. And again, you can see the potential bullish divergence. When I say potential, because it is not confirmed, I want to see this PPO curl back up. If and when that happens, if it happens soon, I'll say this, that will probably be up quite a bit. And so sometimes I will step in, catch falling knives, take an aggressive entry that might have a higher chance of being stopped out, but it gives me a much more favorable entry price. And if things continue to firm up today, and I'm looking, at least if this case plays out, at least for a rally this week, and possibly again into the end of the year and maybe a little beyond that. So we'll see. Then a quick look at the daily charts. I'm not even going to bother with the weeklies on this in this video. The weeklies still look horrible to me and still indicate more downside. And although this is not yet a bear market, we haven't dropped. We're only halfway there. Remember, correction. The technical definition is a drop of 10% or more. 10% off the highs, whereas a bear market's 20% or more, and so we're really halfway there. But again, there's so much more to that than goes in. Again, it's a chart, so at this point in time, while the long-term outlook is still bearish, as well as the intermediate, the near term is starting to firm up. A lot of work to be done. Again, I do these videos and I know they're controversial. Nobody wants to buy on a day like today, just like nobody wanted to short up here when, I was looking for a drop down to, test these lows from earlier in the year. Nobody wants to go long at the bottom, and that's fine. In fact, I feel better if I happen to take a look. I don't always have time to catch up to the YouTube comments, but boy, the bears are coming out of the woodwork now, and that makes me feel good when people think, gosh, you're crazy looking for a rally now, and oh, this market's done, put a fork in it, all that kind of stuff. That's actually good from a contrarian perspective. So no offense to those. And hey, maybe I'm the one that's wrong here. And again, that's fine. As long as you don't get married to a trade, you can always get back in if you take a shot. Like I say, it's that old motivational quote, you miss 100% of the shots never taken. So I'm just looking at risk reward, take little pot shots here. But this one, again, I'm giving the potential to allow it to morph into a runner trade, not just a quick, day trade, let's say, for example. So if we close a day green, especially solidly green, That's good stuff to me. That is good stuff on the technicals here. That would put a, try to envision a big, and that's what I try to do in trading and analyzing the charts. I try to envision what the charts might look like. So if I see a big green bullish engulfing candle here, maybe engulf the last two. If we could engulf well, here's today's stick. So if we can engulf Friday's stick, get above the top of the body at the top of the body on that stick, that would be quite bullish. Take it one step at a time. Maybe getting ahead of myself now. So that's SPY, and wrap it up here with QQQ. QQQ hasn't made a another low. You can say that's glass half empty, glass half full. Maybe you're looking for a bigger divergent low here because we already had a divergent low at this point. If we drop down anywhere equal or below that low, since the indicators here, the PPO is still moving higher, is the RSI, you would have another divergent low. But remember, divergences aren't the be-all, end-all. We already have the divergences on SPY, just about every other index out there, all of them. Here's IWM, which I really like IWM right now as well. We're at support. I have support here around 139, give or take. And so far, here, let me just, we'll get rid of that yellow line. I don't know why I had both there. But that's that. So we have a divergent low at support. If we get some type of washout, flush out move, which is a possibility, I'm not going to ride it all the way down there, I'll tell you that, because I don't see the next support, which is very solid support, is here around 133.45. So let's just say keep it simple. In this would jive. We either get a true washout move. You can't really call today's move a flush out move. I did want to show you something on the 5-minute chart, and then I'll wrap it up. But so there's a possibility, and if that happens on IWM, that washout move down to about 133.50, that's only going to be because of QQQ, SPY, the Dow, everything else going down. That's a 4% drop. I assure you IWM, well, I won't assure you, but very, very unlikely IWM is going to drop 4% without another at least 2% or so downside on QQQ. And that would give you QQQ, wash out. My worst case scenario right now, I don't even want to give you a worst case, but here's what I was originally looking at there, and I kind of backed off it because everybody else started looking at it, and that was a move down to the February and the January lows or early February lows were a lot lower. I should say this is the April low right here. I know I'm talking fast and moving fast. I want to get this video wrapped up, get it out there. So here's your January high, early February low. There's your April low. Those were my original targets, but again, what's bothering me is too many eyes, too much chatter about that now. So therefore, I'm favoring that the market will not give the masses what they want. And if they do, great. I'll just sit back and as far as swing positions, everything else, I'll tell you this right now. I'll continue 401k long-term money just for a tactical bounce too, not not looking 1, 2, 3 year holding periods. I'm talking maybe 1 month, maybe 2 months, and I think to continue to scale down in the next few weeks here, really into year end, whether we continue down or we start to put evidence. If we put evidence of a solid, a pretty high probability bottom, like a very bullish reversal, candlestick reversal pattern, some other things out there, then I'd move it more aggressive. I'd have maybe just stop the scaling process, go to whatever allotment I'm comfortable with. And again, that's 401k money, swing trading account. I take that day by day. So I'm going to wrap it up here after I show you one other thing that I'm looking at. Let's look at a 5-minute chart of QQQ. What I'm looking at is a potential selling climax, near-term selling climax, not a huge one. So here's a 5-minute chart, and you can see this volume on the just about everything, any individual stock, especially the index ETFs, it typically looks like a smile. And what I mean by that is you have at the opening, you have high volume. The volume tapers off throughout the day, and around midday, around lunchtime, it bottoms. That's when traders, everyone's at lunch, and then it starts to pick back up, and then you have a spike at the close. So you can see, I don't know if you can make it out on this chart. I have daybreak lines here. Let me turn those up for you. Daybreak lines, colors grid, date grid lines. There you go. So those are your daybreak lines, so you can see where the volume goes up. Now, what I was talking about here is the volume today. If you look at this volume, forget about the initial opening surge, but look what's happened so far afterwards. That's elevated volume. Let's just say it's about to this level. And you go back now, and we're going back here all the way to the last time I saw volume this high. After the open, at the end of a pretty powerful downtrend was right here. That volume, those volume bars are about equal height to this volume here. And again, barring the surges into the close and the opening, I don't see any of that. This is where the volume normalized over the last few weeks right here. So those are things that I look for. So that is a potential selling climax here. We'll see. And we're taking a little jog down now. Maybe we run at those lows, but again, we're working our way up so far today. We had the initial plunge, a pretty sharp snapback rally, came into the gap, a little more profit taking right here, and this is what I'd like to see and what I'm positioned to see. And if we don't get that, even at this point, as I wrap the video up, I've stops right here on QQQ or NQ and RTY, and I may even move those stops up to break even or maybe for a slight loss to allow a little more downside. But that's that, and I will, of course, follow up today because today has the potential. One way or another, I don't think we're going to sit here where we're at. We're either going to turn down. Maybe this is just a hope rally. Maybe it's sucking in people like me that think we might get a bounce, and then we come down and we're going to have a true waterfall capitulation sell-off. Because on the daily chart, we don't have today's volume bar yet, and the day has only started. But I don't see that big capitulation type sell-off that a lot of people were calling for. And then, at one point I was looking for it as well, and then again, everybody else started calling for it. That's not the whole reason I backed off it. There's a lot of other factors that go into my analysis. So we will wrap it up here. This is Randy Finney with Right Side of the Chart, and I'll follow up either midday or at the end of the day with a market wrap.